Greetings, folks. You've reached DC Investing. I have reached financial independence, and I'm trying to share topics that may help others along this pathway. And today, the topic is how do you invest in the precious metal gold? And I had to learn part of this process along my pathway, and just thought I'd share some of this knowledge to others quickly. If you've never invested in gold before, how do you do it? So the the first way that you can do this is by actually buying the physical metal, and you got to find a source for it. And probably the easiest way is to look up on the internet in your local area for a coin shop that sells precious metals, and they'll sell small bars, they'll sell coins. So that's probably the first way. I think local pawn shops also deal in precious metals. They'll buy and sell it, but um, I would trust a pawn shop a little less than I would a coin shop. You never know. There could be counterfeit gold out there, counterfeit silver. Actually, this is about gold. So, just be cautious. There are some other ways to determine if the metal is really metal. And, a reputable dealer will be better at spotting that kind of stuff than perhaps a pawn shop. So go to the local dealer, look it up, visit them. They'll have a lot of different types of offerings. There's different coins from different countries. Um, the cost right now for gold is about 3,400 an ounce. So if you buy a 1 ounce coin, then the cost is $3,400 plus a premium. So, so that's something to be aware of. There's two concepts that you need to kind of know. One is the spot price, and one is the premium. So the spot price is determined by the COMEX and the LBMA, or I don't know which of those, but basically there's a bunch of people, big financial institutions that are always betting against each other, and that's what creates the price that's out there. And then the dealers tack on a little bit of a premium above the spot price so that they can actually make a little bit of money. So it's good to go into these things armed with, hey, what is the spot price today? So you know what the actual, price is, and then you need to know what their premium is that the dealer is going to charge you, because you can't buy something at the spot price. You have to get it with the premium. And the premium works two ways. If you buy gold, you have to pay a little bit more for it. And if you sell gold, you get a little bit less for it. So there's a premium when you buy it, there's a premium when you sell it. And as an investor, you need to know that there's that spread. So in order for you to make money on a precious metal transaction, you have to both buy it at a reasonable price and be able to sell it at a price where you make money. And so just know that there's that spread. You're going to pay a little more when you buy it and sell it for a little less than spot price. And you just have to take that into account as you deal with precious metals. So the best way for physical metal is to plan to hold it for a long time, because you're going to absorb those premiums. And the idea is that the metal should go up over time, and that you hold it, it's yours, and just kind of keep it as security, and then either hand it down to your kids or sell it back at some point. So there's that physical metal. Another method that's becoming popular is to buy precious metal from Costco. They have some little bars. They do some coins as well. Costco is a reputable dealer, so I'd feel safe purchasing from them. I have not bought anything from a Costco before, but I've looked at them. Some things to kind of know, check the price at the local dealer versus Costco. Sometimes you get good deals, and Costco will allow you to purchase gold with their credit card. And if you have a 2% cash back credit card, well, you get that 2% markdown, in a sense, from your gold. And I think there's also like an ambassador something or other thing you can sign up at Costco that will give you another 2% back. So in theory, you could get 4% total back from your purchase of gold, which could give you a better price. Be careful of sales tax. Some states may charge sales tax for precious metals, some don't. If there's sales tax, just don't even bother. Go to another state or something, because that markup makes a big difference on those prices. So So Costco's an avenue. There's some online places you could order from, some local coin shops. So that's kind of the way to get physical metal. If you don't deal in 1 ounce, there's some smaller coins, but the premiums and the markups are higher on those smaller coins. I guess if you get something larger, there's less of a markup too, but just beware of the premium. So the there's a couple other ways to invest in precious metals. One is to deal with ETFs. This is kind of, they consider it paper gold. These are contracts to buy and sell, but there's some ETFs that give the average person the ability to play in the market. The main source of all these contracts is the LBMA, which is the London Metal Vault, and the COMEX, which is New York's vault. There's a couple other places around the world, but there's big players involved in those, and they kind of bet against each other. They'll short the contracts, they'll buy the contracts long, and the price is just always moving around all the time. So the ETFs that I played in that I know of, probably the most famous is GLD, kind of an acronym based off gold. GLD is JP Morgan's version of the ETF, and some folks in the metals market are suspicious of this one. It's JP Morgan Chase's ETF, and they are suspicious that, hey, the bank uses this ETF to kind of manipulate some of the metals prices. So, it's large. There's people that move in and out of this, but just know that you're buying from JP Morgan. And so a lot of the folks in the precious metal group actually prefer a different ETF. It's called PHYS. That's kind of physical, is the kind of the beginning of the acronym there. So PHYS. Some folks think that the GLD kind of deals more in paper contracts. They don't have as much physical as they say they do. And in their prospectus, there's also some questionable language that says, hey, if there's ever a metal squeeze, we can just settle for cash, as opposed to actually having all this metal. So one of the thought is that GLD may not actually have all the metal. It may just be contracts, whereas PHYS is a better vault in terms of, we're going to buy the metal that we say we will. PHYS is done by Sprott, which is a company up in Canada. They've dealt with in this market for a long time. A lot of folks trust them, but things can change, so just be aware. So PHYS is what a lot of the stackers are using right now, and basically you're buying either GLD or PHYS at about the spot price. There can be some differences, but it's quicker and easier to kind of trade in and out of the metal by doing the ETFs, because you're typically more closely related to the spot price. There's really not the premium that's there. And so as the price of gold goes up, you can sell it really quickly for your gain. And if it goes down, well, you've locked in your loss or whatever. But so it's a way to kind of play the precious metals without having to deal with that premium that a dealer would give you all the time. And so lots of folks use that. So there's also another way to play the precious metals, and that is to buy the miners. And there's a couple of well-known ETFs that kind of buy all of the miners, so that you kind of diversify. So that limits your downside in some cases, but it also limits your upside. So two of the well-known tickers that I've used before is GDX. So GDX, that is the major gold miners. So they have big positions in Newmont and Barrick and some of the others that are just large. And then the ticker GDXJ, again, GDXJ, and the J stands for the junior miners. And so this is an ETF that buys all of the smaller participants. And, there's a lot of, I guess, junky miners that are out there too, that are all kind of lumped together. But the idea is, hey, we're just going to buy all of them. And the hope is that when the price of precious metal goes up, the miners will benefit. And, I've heard it said that when the markets go up for gold, the big miners are the ones to kind of first make a move, and then eventually the smaller miners move, and they move a larger amount because they're smaller. The differences in metal make a bigger impact on them. So GDX and GDXJ, those are two popular ways of kind of buying miners of precious metals. And I guess just know that mining overall is a difficult business. So there's a lot of costs involved. They have to pay for labor, they have to pay for fuel for all the vehicles, they have to pay for all the equipment. So it could be a really tough business. And so the price of gold, like over the past 3 or 4 or 5 years, the price of gold really didn't move a whole lot, but a lot of the miners lost money. And so it's just because their costs were what they are. And some folks say that a mine is really just a liar standing on top of a hole. So I kind of think that's really fun, or a fun acronym, but just kind of be aware that when you have a mine, it's going to be depreciating that asset year after year as they mine it, and they need to find new resources. But if the timing is right and everything goes well, a precious metal miner can do really amazing. And in moments where the commodities are really moving, there's a lot of money that could be made in these markets. So, it's just another way of adding to your finance risk or mix. What I meant to say. It's an asset that kind of might move contrary to your other stocks, and so some folks in the finance community say, it's safe to hold a small portion in precious metals. Whether you do a 2% allocation or a 5% allocation or a 10% allocation, you can add it to your overall investment risk or mix, and then it helps your risks somewhat, because if the S&P 500 is, say, going down, well, the volatility might actually be making the price of gold go up. And so, you can kind of balance things out a little bit. So over the past year, the precious metal price has really done well. It's almost doubled over the past year and a half or something. It's been one of the best performing assets. So, do you buy it now? I don't know. It could always keep going up, but a lot more people know about it now. A year ago, it was off people's radar screen. But, just to know about it and know the different options you can easily use to invest in it is something I wanted to share with folks in the channel. And I've used all these methods before. I bought some coins. I bought the ETFs with the paper gold and also the miners. The ETFs also throw off a tiny dividend. It's not much, but it's at least something. And you're not really going to get a dividend from GLD or from PHYS, and nor by just holding your own gold. So, I guess there are some places you can lease gold and get a rate of return. I think that's kind of, I don't know if I trust those guys. There's also folks that will allow you to put the precious metal in your IRAs. Every once in a while I hear of one of those funds that blows up or it was a scam. So just be really careful about vetting the companies that you might be involved in. So the things that I kind of mentioned are some of the larger funds, and I would tend to trust those more than any vault that's out there that says, hey, give us your IRA and we'll store gold for you. But they exist. There's some good companies, so I guess just be aware of that. So just wanted to share some of these concepts with you. If you're interested in how to invest in precious metals, those are some of the ways that I know of. And it can be just a separate asset you can add to your overall financial portfolio. And if you have some of it, it can behave differently than your stocks and bonds, and perhaps give you a good gain. So be curious. Have you guys used any of these implements I talked about today? Have you bought gold? Has it done anything well for you? Do you have any recommendations for folks in the community? And be curious to hear your thoughts. So like, subscribe. We'll see you. Bye.